more fruitful process to look to buy breaks, and you get more fruit off the tree. That's not to say that we don't have bearish reversals on strong updates. So let's, with that thought, let's take a look at what we see for the markets overall. As the bottom row shows, this is the weekly charts on the E-mini S&P, the NASDAQ, the Russell, the New York Stock Exchange Composite Index, and the diamonds. The diamonds did break out. The AD line on a weekly basis broke out to the upside. We've been talking about sector rotation, monies coming out of potentially the technology space and going into other segments. And guess what, folks? We predicted it, and it's been really what's going on. It was almost as if I took a daily chart of the Qs, all right? If you take a daily chart of the Qs and I highlight a daily chart of the diamonds, and I'm going to put these up to each other. And so as you can see, it took a little while, but it finally came to fruition. You can actually see where the NASDAQ 100, the advanced decline was going down, and the diamonds, the advanced decline was going up. So we were seeing, and that sector rotation did manifest and materialize. So the question begs, where do we go from here? The markets still have a bullish bias in all fronts, but I think what we're going to continue to see is that sector rotation theme. I think there's, as we go to the other markets of interest, namely the commodities. So let me go over to taking a look at a couple things, because last week what we really spent a lot of time on, and if you didn't have a chance to review last week's planning and scanning, I encourage you to do so, because it doesn't get much better than that. I'm sure it can, and I'm sure we will strive to get better, but